Hello everybody and welcome to SMB Capital. Thank you for following us in our videos in YouTube and also in our blog located at www.smbtraining.com. This is actually a Forex update. The last video we talked about what is going to be a market correlations. Correlations is when two or more pairs or the index itself move towards the same direction, or in other cases the opposite to each other. We have for example, like the euro moves with the S&P 500, or also the cable. And the US dollar will be something as a positive correlations, and what we have as a negative correlations will be the US dollar and Canadian going the opposite to the S&P 500. So let's talk about this trade in the Australian dollar and the US dollar. This trade is short using the S&P 500 as basically a positive correlation on this trade. So we, as our previous videos, we talk about areas of decision. Our areas of decisions can be the top of the market, our 619% is level support, or bottoms of the market. In this case, we are located at the top of the market, something, and we're looking forward into a reversal trade. In this case, into a downtrend. As you can see also on this snapshot, you can see the date on this trade. We see that it is on September the 8th, sometime in early morning, in which we took this downtrend as a trade, following the correlation with the S&P 500. This is actually the S&P 500. Also, September 8th, sometime in the morning, there was also the same thing, a closing segment, recognizing a weak market, and also a candle in which reached levels of support and going into the second part of levels on different levels of the market. So in this case, we have correlations. Where does it actually work best? When correlations work best is when it's an area of major decisions. So more or less is once two or more pairs are making the same decision. In this case, we have the S&P in a weak position at top level of the market, and we have the Aussie use with the same thing. Basically, looking at it in top levels on the market, our 30-minute chart, and we have the same exact thing in the S&P 500. So both pairs correlated to the downside, using correlations at major decision levels of the market to make one decision. And basically, so the best way that the correlation will work is actually finding those levels of major decisions. So we have the S&P as well as the Aussie US dollar trying to make a decision in a major area of trading. So in this case, they both follow the same direction, the Aussie, and you would like to correlate it with another pair for a better decision making. You can just go and look which pair is actually the one that you can correlate directly to it, and therefore make a final decision on the trade. In this case, since the S&P recognized major levels of weakness into the market, then we expect the more than trends that Aussie itself, since the Aussie was just making the decision right at the same time as the S&P, but the S&P had a better downtrend than the Aussie itself. In this case, we are on these levels, we are expect major pullbacks in the market, taking more than 3/4 of our positions just in case of the pullback that would present at the levels of support. Therefore, the S&P using CFDs have more than 635 pips from our first entrance, and then since levels of support, immediate support have been breached, then there was more position added onto it. Then after expecting pullbacks, we move our stop loss to a positive level. So now that it reached the levels of support with its fade breakdown, in which we expect this is where we expected the price to turn around into a reversal. That's why our decision was to take 3/4 of our position out and then leave the rest with a positive trailing stop on it. So these are the things in which you will know, you'll be able to identify the best areas of decisions, which ones is going to be the one that would the market would actually go into reversal, and then trade open a trade using correlations with the index itself and or other pairs in the Forex. Correlations is actually used more than 85% of the time when we trade. Therefore, the assistance of correlation is very significant when taking a trade in the Forex. It also works as a negative correlation. The US dollar and Canadian with the S&P 500, it's actually goes on the opposite direction. So in other words, correlations is an important tool at decision trading. We will be updating with videos in Forex, but if you would like more information in our Forex training, you can email me at amsalazar@smbcap.com. I'll be glad to answer any questions that you may have regarding our Forex training, questions you may have, any assistance in your current way of trading. I'll be glad to help you. See you next time.